Today, I want to discuss with you how the recent tweaks, changes to the monetary policy of the Bank of Japan can impact the bond market of the US and of the whole world. So, let's start with what was happening in Japan. So, since 2016, they were doing something called yield curve control. And what they were trying to do was to stimulate the economy, to stimulate the inflation, to have higher inflation, to basically achieve higher growth. Now, why they were doing it? Well, if you can see here, they were in kind of a decade or decades of slow growth. Their index, the Nikkei 225, has peaked in 1989, and it has not yet a new all-time high since then. If you also look at their GDP, it was also kind of going down. And if you compare, for example, this chart of the Japan index with the S&P 500, which is the US index, you can see a clear difference. So that the Japan central bank was in a difficult situation in 2016. Before 2016, they were trying to do quantitative easing, to cut rates, but none of those options were giving the results which they wanted to get. It's also important to show you that in Japan, what they were also facing was deflation. Deflation is the opposite of inflation. So it's when the year-over-year change in average price is less than zero. As you can see on this chart, which shows you the year-over-year changes, you can clearly see that. So here I mark the 0% line. Basically, everything below zero is deflation. It's negative prices. And one can say that it's good for consumers because you want to have cheaper prices, but it's not so good for the companies, for the market, because it's basically more difficult to have a sustainable growth. So because the other options were not working before 2016, Japan has went into yield curve control. What it means is that they wanted to have a low short-term and medium-term yields so that the cost of borrowing for companies would be low. And they also didn't want to kill the long-term yields so that other like pension funds or other institutions could also survive. The yield curve control meant that they were keeping the 10-year Japan government bond at 0%. The yield was 0%. And by doing so, they were keeping the cost of borrowing low. So they were trying to stimulate growth, to have higher inflation. What basically it means that if you are a Japanese citizen, and that it's important to add that Japan is an aging society. They have really a lot of savings, trillions of yens, and they want to invest it in something. So if they look at their bond market and they see that their bonds are giving them extremely low yield, 0%, then they will go to look for something different. So for example, they will go to the US market. And to give you an example, it's estimated that in 2020, 500 billions of dollars in the US bond market was coming from Japan citizens. Now, as inflation was coming higher and higher in Japan, because in the end the problem also arrived.
Hello there.
That it didn't stop at 2%. What they wanted, it went higher to 3-4%. So it was even less sense to be a buyer of the Japan government bonds, which were giving you such a small return. So in the end, it was creating a higher pressure on the Bank of Japan because there were less people interested in buying those bonds, and there were more people who were selling them and moving to different countries, moving to buy bonds of different of the governments of different countries. So as a result, this pressure, it was difficult to sustain the 0% yield. So the Bank of Japan over time have been giving some more room and more flexibility. So first they gave a plus minus 0.1%, then plus minus 0.25. In recent months, they allowed the yield to rise to plus 0.5%. And now, as you can see here in their today's meeting, they gave even higher flexibility. So the Japan bond yields surged to 9-year high. And what they did is basically now the plus 0.5% yield on the 10-year government bond is not a rigid limit, it's rather a reference. And here you can see that they said they would offer to buy 10-year Japanese government bonds at 1% fixed rate operations. So they gave additional 50 basis points of room. And now, why is it important for people in the US, in the Eurozone, in all the world? So as I said before, Japan is an aging society. They have a lot of savings, trillions of yens, and they want to invest it in something. As their government is offering them their bonds on a very low yield, on a very low return, they will go somewhere else. Now, it's not perfect to go to buy the bonds of a different country, and probably it would be most simple and most logical to stay in your country. It's the most easy way. So if Japan will start giving more flexibility, if the yield of the Japanese government bond will start rising, or even if at some point they will stop the yield curve control, many Japanese people who are currently buyers of, let's say, US bond market will start selling the US bonds, the US Treasury bond, and they will start coming back to Japan. Now, selling US, if there would be like many people with high capital who will start selling the bonds of, for example, the US government, the yield of the US Treasury bonds will go higher, will go much higher. What it means for a country is that the financial conditions will tighten even more. So you already have the Fed, which is hiking the rates, and recently they hiked again by 25 basis points. And now if this happens, it can give an extra negative pressure for the financial system, for the economic system in the US. So I think that it's something which one should really keep an eye on to see what happens with Japan. Because what happens to the Japan bond market, as explained, it will have a very high implications for the US bond market and other countries' bond markets. So let's see what will happen next. Thank you for watching the video. I hope you enjoyed it. Please like and subscribe, and see you in the next one. Bye.